The digital studios of MarketClub, and we have some big markets today. We're looking at the 5 major markets. That's the dollar index, metals, energy, the inflation index that we use, and also the indices. This is for Tuesday, 1 p.m., the 5th of April. So let's get started. We're looking at our portfolio manager, and you can see quite clearly we have a lot of plus 100s. What does that mean? Lots of very powerful trends that are starting on the upside. Now, the big news to me today was the gold market, which basically traded new highs for the move. And I'm going to just show you a chart right now, and you can see this is a huge move in gold. This to me is the biggest move we've seen in gold, and has clearly taken out the resistance we talked about in our previous videos and also in our previous messages to you. And let me just show you how we think this is going to work out. First of all, this has now become what we call an energy field. This has enough energy, in my opinion, to propel this market up to $1,500 an ounce. We're currently trading at 1452.38. This is live. We're doing it during the day. You can clearly see this is a very strong day, and it probably is to do with what Tim Geithner said about possibly a default on the U.S. debt. And that's unbelievable. We should hear that from a government official. But nonetheless, it's a very strong score, plus 100. All our indicators are positive. Look for this market to go higher. Any pullback to the 1440 area is going to be met with good support. And it's not just in this market, it's also in the silver market too, which also has a new high for the day. And that is, we're trading at 39.22, that high. It's 39.14. We have been advocating buying silver, selling gold equal amounts, and you can see this is still working today. The silver is up 1.4% and the gold is up 1.1%. So clearly you're making money on the upside, and silver continues to be a really outstanding trade. As you can see, look at the chart. It's very clear that the trend is very strong in silver, and it's just heading up, and looks like it's going to continue to go higher. So let's go on to the other markets, because time is precious. There's lots going on today that I want to cover. And let me take this off the screen. And you'll see the next market we're going to take a look at is the energy market. Now, we talked about this over the weekend update we had. And also, let's just go to our portfolio and look at the energy market, which is right here. We track the USO and also crude oil. But on top of all of these markets, we cover all the we cover 258,000 symbols, and that's a lot of symbols. So all the North American stocks and Canadian stocks, as soon to be Australian stocks, as well as the futures. So here we are. We are down a little bit in energy, but nonetheless, we've just turned 90 on the USO. So let's take a look at that chart. And you can see we're sort of hovering around these levels here. And one of the really cool things I'll show you on the dollar index, and I think that'll be a better example of what we're looking at. So again, the trend is clearly up. All our indicators are plus. We have a plus 90, meaning a strong trend. And if you're ever doubtful on the trends, all you have to do is just click here.
This chart is showing a score of plus 90, which indicates that this market is in a weak uptrend. Keep an eye on the chart analysis score to possibly hit a plus 75, which may indicate a short-term reversal. And always use proper money management stops.
So there you have it. That's our talking chart technology, and it's very powerful, and it covers all the markets we talked about, the 258,000 symbols throughout the day. Now that can change later on as the scores change, because we're doing this dynamically. But let's take a look at the dollar index, which has really taken a beating here, and we have a minus 85, which means the dollar is going down, which means gold is going up because the value, it's taking more dollars to buy gold. And that's one of the main reasons why gold is going up, because we're devaluing the dollar little by little by little. It's death by 1,000 cuts here. And again, all we have to do is this.
The minus 85 score indicates that the downward trend is intact, and we are seeing a little counter trend rally. Look for the downtrend to resume.
Okay, there you have it. Basically, we track these markets. We tell you what to do based on our talking chart technology, as well as when you go to our scoreboard, you can clearly see the dollar index is a minus 85, which once you get these minus 85s or plus hundreds, it tells you immediately when you look in your portfolio exactly what to look for, what's strong, what's weak, and when to get in and when to get out. So that's one of the big pluses for our service. And let's take a look at the Reuters Jeffries Index. And this used to be called the CRB Index. It's been changed names, but it's a great way to look at inflation. And as you can see, we're about flat on the day, just a minus 0.03%, 3 points rather. Let's go to the chart, move this down, and as you can see, this market, I'm going to scope this out even further because we carry a lot of information on this. And as you can see, let me go back probably the last couple of 5 years and then just a little bit. This is very easy to do with MarketClub, and I'm just going to put a close-only chart. So you get an idea. With this particular index, we use our monthly trade triangles for the trend. As you can see, the monthly trade triangles got you out very clearly at 396.80 and got you back in at 229.62. A huge dollar move. Again, we got out here at we were in at 229.62, out at 267.58, a huge profit, and again we're in at 278.10. So clearly, based on our trade triangles alone, you can make money, and this trend is definitely on the upswing. Regardless of what the government tells you, inflation is on the way. I mean, how can you have inflation without including food and energy? I mean, that's just an insane index they've got. This really does tell the picture. And as you can see, since a low in March of 2009, we've steadily gone up and up and up. Do we reach this level here? Everything is possible in trading and in this index. So let's see how things work out. We're clearly on the upswing, and inflation is alive and well, and going to cost us all more at the gas pump and at the supermarket. So let's take a look at our next market. And we're going to look at the indices here. And let me just change this, my pen here, clear this, and go off. And let's look at the Dow Jones, the NASDAQ, and the S&P. Well, the big news today was the realignment of the Apple computer in the one of the indexes, and that was I think that was the NASDAQ. But nonetheless, let's take a look at this one here. We're plus 100. We're up a little bit, 0.30%. And these markets, for some reason, the indices, while it's still plus 100, they're still a little bit on the defensive in my mind, and they really haven't got themselves together in a really big way. So let's just close this in a little closer, and that would probably be as close as we want to go right now. We'll put a candlestick chart on. Obviously, this is a good day today. The market's closing higher, but having said all that, we're approaching an area that is going to offer resistance on this market, the S&P 500, and that's right here. This is definitely going to offer resistance. We're not just going to breeze through here on a summer day. So the concern I have, and the question I have is, if we get here, do we go this way, and then do we start coming back down as inflation kicks in and the Fed is forced to raise interest rates, which would be another negative, in my opinion, for the stock market. But nonetheless, the key thing is trade with the trend. The trend is your friend. The trend is still positive. There's no reason to go short this market. We have been long this market from 1,000 to 131, and we're currently trading it. We have 200 points profit in it right now, so there's no reason to jump out and get excited. So let's see how this one pans out, and let's take everything off the screen. Let's go back to our indices, and let's take another look at the indices. Let's look at the NASDAQ, because that's up 0.5% today, but that was looking, it still has never gotten back to its 2000 levels on the NASDAQ. Again, we're creeping up towards this, what I consider to be potential resistance for this market. And here is what I'm looking at. All of our indicators are plus right here, the weekly and the monthly. Now we use the monthly. Hope you can read this at home. That's for trend. And then we use the weekly trade triangles. That's the monthly trade triangles right here, by the way. The weekly trade triangles for timing. And they have done remarkably well. And you can do this yourself with our service. It's easy to do. And as you can see, this is where I'm looking for resistance to come in, pretty much where the markets are getting. But this should be the big R, as we say, is going to be right here. Somewhere in this area, I would expect this market's going to have some sort of problem. So, hey, this is Adams Hewison for the Tuesday update. the 5th of April, 2011. Thanks for stopping by. We'll see you tomorrow.